Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Checking in on Twitter on the daily and weekly time frame. Bulls are doing a good job holding support, but it's time for them to show up and get some higher highs going. We've got a tightening range forming, and we're going to see a breakout or a breakdown likely next week. So we had the key all-time low of 1391. We broke it by a penny, but bulls bought that dip and responded in a strong way. Setting now some higher lows, 1398, and the last 2 days, $14 was the low of the day both days. So that is the key support levels. We're looking at 14 and 1390. If we lose 1390, we know it's a bearish entry. And if we gain this 10-day moving average support, it's currently 1434. We'll be looking for some upside momentum. We've still got some lower highs here, 1528, 1498, 1486. So even if we break to the upside and get to 1450 or so, that would still be a lower high in this pattern. So we're going to see these levels converge, and if we get a bearish breakdown, it will be a bearish entry, and that's what I like about these kind of plays. They do let us know that a move is coming because of the tightening range, and you can play it in either direction and be prepared in either direction depending on what we see, and a break of 1390 would be a clear indication. So the benefit of covering all the stock charts that I do daily is that when I see a pattern that looks like a different pattern, that will flash into my head. And Apple was in a very similar situation before having the bearish breakdown. So here's what was going on for Apple. We formed a double bottom at 91.84, and that is essentially where we're looking at $13.90 and $14 for Twitter. And we can see after the gap down, there's our high, our lower high, and our lower high, and we got a very tight range. And once we got that breakdown, there were very nice gains to the downside on that clear signal that the bears won that battle. So we'll be looking for the same thing on Twitter. Maybe not a bearish break. I would say it's more likely than a bullish break because of the way the market is currently set up. Make sure and check my SPY video to get my feelings on the S&P 500. But looking at this pattern, like I said, it could go either direction. I would favor the bears slightly, but still going to wait and see for a clear break before making a play. And that will occur next week likely, and we'll check back in after that happens. So thanks for watching. Have a great weekend. Thanks for watching. The Chart Guys community has compiled trader tips from dozens of traders over the last year and put together a free ebook you can access by clicking the button and entering your email. Have a wonderful night.